Hello everyone. I'm YouTuber Crypto. I'm here to provide you with a quick update on the market. Let's start by looking at the daily chart. Let's turn on the EMA ribbon. As you can see, the moving averages are transitioning into a bearish formation on the daily chart. It has just formed recently, indicating that if we have a new trend coming up, this could be the starting point. It signifies a suitable entry or a point of trend reversal right here. Therefore, in the previous upward movement, when it reached this point, it marked the end of the bullish trend. Upon review, we can observe that the moving average indicator does an excellent job of capturing trend movements. What does it mean? For example, in the previous bullish trend, if we had followed the signals indicated by the moving average, we would have entered the market here and exited after the entire wave at this point. This is a strategy that can be derived from the moving average. Similarly, for example, we made a short call here and exited here. The trend was too short-lived. However, if we extend the time frame and look at this area, where the market turned bearish, and we went short, it was only at this point that the trend changed. Therefore, you can see that profits can be captured throughout this entire period. Also, in this section, the bearish market started here and ended here. When it comes to trend trading, the moving average can clearly indicate the starting and ending points, as well as suitable entry and exit points. The only challenge for the moving average is during oscillations. Because the MA switches between bullish and bearish formations during oscillations, it becomes tangled, making it difficult to determine the direction. As you can see in the previous example, such as the entire wave down on May 19th, it actually provided early directional signals. There are various indicators, and they actually provide direction after a decline. However, you can observe that when this indicator appears, it occurs before a sharp decline, not after. Furthermore, during the beginning of a bull market, as shown here, it was a significant uptrend movement from around 10,000 to around 60,000. It perfectly demonstrates the bullish market. The only situation where entanglement occurs is during oscillations. For example, during this period, there is a characteristic of it, which is oscillation before transitioning into a bullish market. You will observe the indicator rapidly changing its direction. In such cases, it is not suitable for trading or making trades based on moving averages. As you can see, if it keeps oscillating back and forth like this, it will definitely result in frequent stop losses, because moving averages have a slight lag. In contrast, the reference value is higher for this area we discussed earlier. From this point, the moving average turns bullish, and it transitions from bullish to bearish after an uptrend movement. Even though it doesn't immediately decline, it signals the complete end of the previous bullish trend. After the trend ends, we encounter another oscillation period that is not ideal for trading. It oscillates between bullish and bearish, which is quite challenging to operate. Once the decline starts, you can notice that it also oscillates downward. It doesn't exhibit a clear trending market. It simply maintains a downward oscillation. Therefore, during the process of trend transitions, such as transitioning from a small bull market to an oscillating market, and then from an oscillating market to a bull market, these situations may arise. Now, if we look at the current situation, it is undoubtedly dominated by bearish sentiment. Reason? It's turned bearish. However, in this area, it is highly possible, in my opinion, to experience an entanglement and prolonged oscillation, especially if there is a sharp decline, an oscillation, or a significant rise. The probability of continued oscillation in this entire period is the highest. Why is that? You can see that at this previous point. This is how it unfolded. The magnitude it covered was 62 days, with a volume of 1.6 million. To equal the volumes in distribution and accumulation, let's measure it from that point to the present. It has been approximately 70 days, with a volume of 914,000. If it wants to follow a similar pattern as the region below, it will take another 40 to 50 days. So, I believe that if there is a next price action, it is more likely to be a downward trend. It would need to oscillate for another 40 to 50 days. From this point, possibly reaching around 100 days before showing a new direction. This, in my opinion, is the most likely scenario. Currently, there's a tug of war between bulls and bears. The price is declining. When observed at a smaller time frame, we can also see a bearish trend. However, the volume shows neither the bulls nor the bears have a significant advantage. In this type of market, after reaching a new high and starting to decline, forming this narrow range of oscillation, we have seen a similar pattern before. Of course, it eventually ended with a sharp decline, which happened at the previous peak of Bitcoin. Here, you can see that after the rise, it started to oscillate. Here, after the price hit a new high, it oscillated downward gradually. Of course, this is before the actual sharp decline. It's not accurate to analyze after the sharp decline. Now let's look at that point. Let's look at the situation at that time. We'll focus on the volume, not the candlestick patterns, as they show oscillation, and there isn't much to analyze. We can observe the bearish volume below and the weak resistance from the bulls. In this scenario, you can see that it was followed by a violent decline. It was also the possible starting point for this bear market, and the ideal time for spot traders to exit their positions. It was right in this area. If we were to exit at a lower level, the profit would have already retraced significantly. Now let's assess the current market situation. You can observe that it has reached a new high, and then started to oscillate and decline. In this area, the market has formed a relatively narrow range of oscillations. However, if you look at the volume in this oscillation region, you'll see that the bulls have not been completely overwhelmed. Even when we examine smaller time frames, the bulls still have some ability to push back. In this area, the volume of the bears is not significantly stronger than that of the bulls, as the bulls attempted to regain control. When we zoom in further to the 4-hour time frame, we can see that during the downward movement, here, there is a long lower shadow, followed by continued oscillation after heading upside. While here, a long lower shadow was formed before the price moved upward. If we plot this chart, we can observe that during the downward movement, the volume, including the recent bullish volume, during the upward movement, does not indicate a clear dominance of the bulls. This includes the lower shadows and the trading volume during the uptrend, where the bulls did not dominate. Therefore, currently, the bears do not have a clear advantage. So based on the current market conditions, it appears that the market has entered a bearish phase on the daily time frame. The previous bullish trend has ended, but it might be a bit early to enter short positions. At this point, you may notice that the price has encountered several supports in this area, forming a valid reversal roll. After breaking below, the price has moved back up. Personally, I opened a short position when it broke down, but I closed it with a stop-loss range of about $200, which was around the same level. This is because if a major drop is about to occur, it would be unreasonable for the price to stabilize and re-establish above the previous support before the drop. Therefore, we need to wait for further opportunities. Currently, the market conditions are challenging. The price is not experiencing a straightforward decline, but rather oscillating downward. Within this oscillation zone, stop losses are likely to be triggered by friction, and false movements are frequent. Additionally, the trading volume has decreased significantly compared to the previous period. So, I believe it is advisable to reduce position sizes. Of course, it's worth noting that I have already exited my spot positions. Thank you all very much. By the way, if you would like to register on the Bybit exchange, please click the link below. With a deposit of $100 after completing KYC, you will receive a $1,000 worth of Bitcoin contract position as a bonus. What are the steps? Click the link below. Go to this page. Make a $100 deposit after completing the KYC process, and then choose whether you want to receive a long or short position. Once you have selected, the position will be set up immediately. If the market moves in the direction you chose by 10%, you will have already doubled your investment. Moreover, the profits you earn can be withdrawn directly. Please click the link below to learn more. Alright, thank you. You're welcome. To like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.